Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started, any advice provided by Brandon is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you. Brandon Kolk is authorized to provide general financial product advice in Australia and is authorized representative number 1305795 of Guideway Financial Services Proprietary Limited, AFSL number 420367. Please see the description box for Brandon's financial services guide. Past performance is not a reliable indication of future investment returns. But with that said, let's get into another episode of the Young Investors Podcast.
Well, everybody, it's time. Hamish Hodder.
Hello.
It's time. We are going to revisit our stock market predictions.
Do we really have to? Do we have to look? We got everything right, okay? We predicted everything with 100% accuracy. We don't even need to look at it. Trust me. I looked.
I predicted the exact amount the S&P would be up this year.
Yeah.
It's phenomenal.
Yep.
To 3 decimal places.
That would be quite something.
That would be something. Oh, I tell you what. Okay, I got to tell you a little story here about improbable things, right? And I swear that this actually happened. This blew my mind because I don't think anything in my life, nothing that I ever experience again will have a lower probability of what I experienced. Okay.
Wait, you're really hyping this up.
Yeah, I know. I mean, it's not that groundbreaking, but I think the probability is there. So I was with my best mate Matt, and we were just flipping over playing cards, and I had the deck of cards, and I shuffled it, so I knew that there was no funny business, right? Yeah. So I had this deck of cards, and I told Matt, guess the number. And he guessed one number. I said, do it again. He guessed the second number. Do it again. He guessed the third. He guessed the fourth. He guessed 5 numbers correctly in a row.
Yeah, that's crazy.
Out of a deck.
Wow.
Out of a deck of playing cards. I'm not quite sure, like, you could work it out. What is it? How many numbers are there? I guess there's the jack. There's 13 cards per suit. Is that correct?
Yeah.
So you've got a 1 in 13. So he hit a 1 in 13 5 times
so
back to back.
1 over 13 to the power of 5. So it's like 13 times 13 times 13 times 13. Yeah.
So whatever that is,
there's an astronomical number. Yeah.
That is an So I actually think, like, statistically, that's probably one of the least probable things that I will just ever experience in my life.
Yeah.
If not I don't know.
Like an actual calculatable outcome.
Yeah.
Like flipping a coin like 100 times or something. It like heads 100 times in a row or something.
Maybe if someone's like a budding mathematician out there, maybe they can do a comparison. Like what is that in equivalent to guessing like heads X amount of times in a row? I don't know. But
yeah,
you could work it out.
Be way more heads. Yeah. Way more heads. Yeah, I don't know. I don't know exactly.
But anyway, unbelievable.
There you go.
Anyway, but yes, back to the topic at hand. We are going to revisit our stock market predictions, Hamish. Are you feeling confident?
Well, I mean, I've looked at the results, so no. Didn't really want to turn on the camera today, but no, it's always good fun to see what we predicted. Because I decided to go one particular direction with all of my predictions rather than being all over the place and getting some right. So I was either going to be completely right or completely wrong. And we shall see. We'll see.
We'll see whether you got the head or the tail.
Yeah, exactly right.
All right, very cool. So that's what we're going to be doing for probably the first half of this podcast, I would imagine. It's a bit more of a laid-back episode. We're running into the holidays. We're not going to, we don't take ourselves too seriously with these predictions. No. And I think that's probably what we were saying back when we first made them. Yeah. In honesty, it's mostly just an exercise in reminding ourselves that you can't predict what happens in the stock market.
Yeah, and that it absolutely doesn't matter at all to your investing. Some of the things that we're going to be, that we were predicting. So, yeah.
Yep, despite all of these predictions, us being, partially right and mostly wrong, at the end of the day, we still made good investments and the portfolios are looking healthy. But that just shows you that, when you're looking at individual companies, all this guesswork as to what the stock market or the economy is going to do, it's not it.
Yeah.
That's not it. But anyway,
Yeah.
so we're gonna do that for the first little bit of the episode. We do have a couple of other news stories to get to. We'll see how we go. There's a big COP28 climate summit that's just wrapped up. So the interesting economic news out of there. The Federal Reserve has made a decision on their interest rates moving forward. And SpaceX actually has a new valuation. And if we get time, we've got a little bit of OpenAI news, but we'll see how we go because it looks like it's going to be a pretty jam-packed episode.
Yes, I think so. So with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
All right, Hamish, and with that said, the stock market predictions, they begin.
Da-da-da.
What on earth did we say? I'm sure the first one we would have done the S&P 500. If I'm not mistaken.
Well, the good thing about what we did last year is we did a lot of predictions. So there's a lot of different predictions: stock market predictions, economic predictions, political predictions, other kinds of predictions. So we've got a lot to go through, and some of them are very interesting. Some of them we were completely wrong. Some of them, one of us was completely wrong, and the other one was completely right. And some of these, there's a lot of variation here, as you would probably expect with a bunch of throwaway predictions. But yes,
with these, do we get a point if we're the closest to being correct, or like for these S&P 500?
Yeah, okay, let's do that. Let's do whoever's the closest gets the point. Maybe you get double points if you're really, really close to it.
You're really
within
right.
a very
2
small
points
margin.
if you're bang on, 1 point if you're the closest.
Yeah. Okay.
And then shame if you get it wrong.
Yeah. Shame from everyone in the audience in the comment section.
All right, I'm going to keep this running tally here. All right, let's do it.
So, yes, first up was the S&P 500, the 500 biggest companies in the US. And the question simply was, is it up? Is it going to be up or down at the end of the year? And by how much specifically? So your rationale essentially was the market was down 20% in 2022. The Fed was already slowing its rate hikes, and you thought there would be somewhat of a tailwind behind the market. So you said up by 10%,
Right.
which was actually pretty close. The actual was up by, well, at least so far, is 23%. Probably one of the best years in the S&P 500's history, to be completely honest. Which is hard to predict that exact percentage. But you were certainly in the right direction, and I
got the right direction.
Yeah, you got the right direction, and you made a reasonable prediction. I was completely wrong. I made a point of going against you on pretty much everything. So whenever you're right, I'm probably going to be wrong. I said inflation would be harder to get down than expected. And I basically was talking about how the real impact of rate hikes on the economy has yet to be seen. So we hadn't actually seen like corporate profits decline. We hadn't seen consumer debt rise to a substantial amount. We hadn't seen the housing market slow down. Any real impact. It was just kind of a financial market impact we'd seen. Tech stocks coming down, the broader market coming down. So I thought there would be more pain. I said down, and I said down 15%, which I don't think you could be any more wrong than that. And that's not only is that incredibly
taking the chocolates on that one.
Yeah, not only is that incredibly wrong, it's unfortunately a taste of the rest of these predictions.
Oh gosh.
So following on from that, we did the ASX 300, the 300 biggest companies on the Australian Stock Exchange. Again, same question, up or down, and by how much? We didn't really talk too much about this, except for the fact that we both acknowledge that the ASX generally follows the US market to some degree. So following my previous prediction, I said that it would be down 8%. The actual was that it was up 4.2%. And Brandon's prediction was up 5%. So I'll give you 2 points for that. That's a 2-pointer.
2 points.
That's pretty close. That's close enough.
You are generous, sir. You are generous.
Yeah, and I should be on negative points for how atrocious I'm doing so far.
So I'm not. I just want to pause. This is a 3-0 lead so far.
Yeah,
3-0.
This is bad.
Come on. This is great.
And it gets worse. The Nasdaq.
Oh, this is fantastic.
The Nasdaq. The tech indice of the US. At the time, it was down 33% year to date. So tech had a terrible year in 2022. The broader market did terribly as well, but tech in particular was very bad, down 33%. Brandon, you thought it would be up 10%, so you thought again there'd be some rebound, same as the broader market. I thought that tech would continue to get crushed with further rate hikes. I said down 25%. It is up 42% year to date.
That's crazy. Hey, that's actually nuts. The Nasdaq's up 42%.
Yeah.
This is actually interesting because I have not looked at the major indices, like their performance this year. Like I know that the market's been up because the Magnificent, like I know that, but I haven't actually got numbers to put next to it. To hear that the Nasdaq's up 42% this year is insane.
That is an astounding year. I mean, even the S&P up over 20%. That's a crazy year. Yeah. I don't know where that ranks it in terms of like the past 100 years of returns, but it's way up there. And that 42% from Nasdaq has to be one of, if not the biggest year for the Nasdaq. I'm not really sure, to be honest, but
I don't actually know how many stocks are in the Nasdaq, but the Nasdaq composite
100.
100.
Yeah, I think it's 100.
Okay.
I'm pretty sure. Yeah.
Well, it says I know that there's the Nasdaq 100. Is that the Nasdaq composite? It says here the Nasdaq composite is a stock market index that includes almost all stocks listed on the Nasdaq Stock Exchange.
Oh, okay. So that's probably a much broader number than what I'm thinking of.
Is this a gap in my knowledge? Nasdaq composite versus Nasdaq.
No, I think there are quite a few hundred in the Nasdaq. I think I was thinking of the Nasdaq 100.
Yeah, there you go. The Nasdaq 100 is frequently confused with the Nasdaq composite. Yeah, there you go. So we're looking at the Nasdaq composite.
Yep.
Which is even crazier that's up because that's almost all stocks in the Nasdaq. That's even crazier. That's 42%.
Yeah,
insane. Ay caramba.
So again,
anyway,
you get a point for that. I definitely don't get a point. Can I get a point for that one? No, I don't think so. I don't think. I was only off by 67% percentage points.
Oh, I'm loving this. Ooh.
Yeah.
All right, and that's all we got time for today, everyone.
Yeah.
So the final scores are in.
well, that's probably. Can we please do that? Can we end the scores here? Can we stop the count?
Mercy. No. White flags are up from Hamish.
Yeah. All right. Next, we have Tesla. So far,
cool.
So in 2022, Tesla was down 65%. So the Nasdaq was down. Yeah. So Nasdaq was down 33% in 2022, but Tesla was like significantly worse, down 65%. So it had already gone down a lot. Brandon said up 30% in 2023. You spoke about their really solid roadmap, the Cybertruck coming out. Revenue will probably keep growing substantially, and that there's plenty of demand for vehicles, and stock is already down a lot. So you gave a lot of good kind of fundamental reasons for Tesla to be going up in 2023. I said the complete opposite. I said down 42%. I was very ambitious with this. Apparently I didn't like Tesla at the time. It was down 60.
I think you just didn't like me. You were just like, oh, I don't want to. I can't agree with that guy.
Yeah, I did make a point multiple times throughout this that I was just like hard going against everything you were saying, just for fun. Yeah. So I said I actually agreed with everything Brandon said about the fundamentals of Tesla, but it's still a really hard prediction. Just because of the valuation and changes in interest rates and that sort of thing. And Tesla in 2023 was up 121%. So yeah, I was off by 67 percentage points in the last one. This one I was off by 163 percentage points. So it's getting worse, as I said. I think I deserve negative points for that. I should be in point debt for that prediction.
It's okay. Mercy. I won't inflict that pain on you, Hamish. But I will take the point. So we're now 5-0. All right.
Yeah.
This sounds like Matt playing ping pong against me, except he'd be the 5 and I'd be the 0.
Yeah, it's very bad. Can we stop, please? I don't want to go on.
Nah. Continue.
Right, moving on. Okay, so we said we'd do the best and worst performer of the biggest 50 companies in the S&P. which I realize now is a really stupid thing to do because I couldn't find a list of just the 50 biggest companies with their year-to-date results. I'd have to go through one by one. So I'm going to be honest, I couldn't be bothered finding the worst performer, but we know what the best performer is because I think everybody kind of knows what it is. So we can still look at what we predicted and what actually happened. So I predicted the worst performer would be Tesla. They were up 121%, so we can safely say that was very, very wrong. I said the best performer would be Meta Platforms.
Oh, yeah.
And very interestingly, you also said the best performer would be Meta Platforms, which wasn't correct. The best performer was NVIDIA, but Meta Platforms was number 2. So we were both very close with our best performer in the S&P, in the 50 biggest companies in the S&P.
Maybe half point?
Yeah.
Half point there?
I'd love a half point. I'd just love something. Just get
I'll
the
give you
ball
a half
rolling.
point.
Okay.
I'll go up to 5.5, although I might be in negative points on this next one.
Yeah, maybe the most hilarious prediction on here was you predicted the worst performer in the 50 biggest companies would be NVIDIA. Which, as I just said, was the best performer by a landslide. Actually, I didn't actually look up exactly what they were
so
year
funny.
to date. I'm just going to pull it up because it was an insane figure. NVIDIA. Let's have a look. Year to date, 236%. So no, not the worst.
I said it would
performer.
be the worst performer.
Yeah.
Yeah, I didn't get that one right, did I?
No, you didn't.
But I think that's almost like a points level. Like I got to lose a point there because for me to say that NVIDIA will be the worst performer and it's actually the best performer.
Yeah,
that's a bit.
That's
not a great prediction.
Yeah, that's glorious. So I'm glad at least you had an atrocious prediction in here because I've had some bad ones. Don't worry. I've had my fair share of bad ones so far.
I'm gonna deduct myself that half point that I gave myself.
Nah. Oh
no.
Nah, don't do that because then you've got to deduct from my 165 percentage point miss.
Okay, fair. 5.5 versus 0.5.
I should be disqualified for that prediction.
I feel like I should be disqualified for this prediction.
Yeah, they're both.
That's atrocious.
That is true. All right, moving on. Well, it actually doesn't get better for you. You've got some bad ones coming up. So we had Bitcoin.
Oh, really?
Bitcoin. Bitcoin is always really, really, I mean, they're all obviously ridiculous, but Bitcoin is particularly crazy because it has these massive swings and no one ever knows what the hell it's going to do. Which makes it, again, one of the more fun predictions to look at. Brandon said, and this is a quote, "Crypto is dead." Which, if you've been looking at the crypto market, it's very, very much not dead. You said that the times of wild speculation are over. You said Bitcoin would be down 46% in 2023. I said, well, I agreed with you. So I said it would be down 27%. Not as bad. The actual, I didn't actually put it in the document yet, but it is up a lot. I'm looking it up now. Just realized I missed it.
Up quite a bit, I would imagine.
It is up 165% year to date. So, yeah, your miss is now at over a 200% miss. So that actually beats out my my Tesla miss.
That's shocking.
So that was way off.
That one's super volatile. We know going in that Bitcoin's going to be more volatile.
Yeah. You know what's actually funny?
But that is still a big miss.
You know what's actually funny?
I'm trying to make excuses.
Yeah. The funny thing is, after we made these predictions, you then went and said Bitcoin will go up 200% and we'll be way off. So
wait, what?
So straight after we made these predictions, you were like, "Oh, but also Bitcoin probably goes up 200% in 2023." Or you said something along the lines of that.
Oh my gosh!
So again, you hedged your bets and you were right with your throwaway prediction.
Yeah, throwaway prediction. I'm going to give myself a half point. No, definitely not.
No chance at all.
That's pretty. So we both get nothing for that one.
Yeah.
Or do you get a point because you're closer?
Oh yeah, I forgot we were doing that. Yeah, I guess, right? Yeah, I get a point. I get a point for being closer.
You get a point.
Yeah.
Hamish should say, all right, you win that one. Well done.
Yeah.
Bitcoin went up, 100 and something percent? You guessed it would be down 27%, and somehow you get a point for that.
Close enough.
Well done.
Close enough. Close enough.
1.5 to Hamish. All right.
All right. Should we keep moving on?
Yep.
All right. This is an interesting one. So of course in 2022, FTX collapsed and BlockFi collapsed. We had a bunch of crypto firms go under. Obviously the crypto market was down significantly. So we were asking, are there going to be any other big crypto firms that go bankrupt, like Binance, Coinbase, that sort of thing? And we both said yes. You said, well, again, we didn't really have any. Obviously, this is just a complete throwaway prediction. All of them are. But you said yes, Crypto.com, and I said yes, Coinbase. And neither of those companies went bankrupt. So
no points.
Yeah, that's no points. For that, I don't really have anything to say particularly on that.
No, we just took a stab in the dark and it didn't work.
Yep. Okay. Here we are. This is the big one. This is my favorite prediction of all of them. Okay. The price of oil. Okay. The thing that I said I know absolutely nothing about, and that I was just going to throw a random number at the sky. Okay. You said that oil would be up. Crude oil would be up 3%. I said down 13%. And crude oil is down 13% in 2023. So I'm taking 10 points for that one. No, I'm joking.
No, you get 2. You definitely get 2 points. You get double points for that. That's amazing. What a prediction.
Yeah.
Jeez, you are and Hamish's course on oil stock analysis comes out later this week. So keep your eyes peeled.
I'm the oracle of oil. Yeah. The oracle of oil. Which is that's just the perfect outcome for this entire thing, because all of the predictions where I'm giving like some rationale are completely wrong. And the one where I have literally no rationale is the one that I get correct. And if that says anything about predicting economic events, that's like the perfect. That's just like the perfect outcome.
Wow, Hamish, you are coming back very, very strong. I'm now on 5.5 points. You're on 3.5 points.
Wait, sorry, what are you on?
Double.
How many points are you on?
I'm on 5.5. You're on 3.5.
Yeah.
So you're coming back because that one definitely saved you. That's definitely a double pointer. That's 2 points.
Yeah, this is a lot closer than I thought it was, actually. I was very pessimistic about the first few ones, but there's actually I've got a few more points coming, I think.
Okay.
I think I might end up doing all right. One of the questions we had was, will there be any consolidation in the streaming industry? So maybe like a big merger or Disney buying a small studio. I said yes, but I don't think from what I was just looking, there wasn't any major events that I could see. Maybe there was something small that I just missed this morning that I'm blanking on. But I didn't really see anything. So we don't really have to. Yeah, and you didn't make a prediction on that, so. Just kind of move on past that. All right, so that's all the stock market predictions. We're now into the economic predictions. Inflation, federal funds rate, Australian inflation, Australian cash rate. And this is where it gets kind of interesting here. So we'll start in the US and then we'll go to Australia. US inflation. What did we think it would be? I actually didn't write down. Did you have written down what inflation was at the time of this?
Oh, no, we can look that up real quickly. Inflation US. At the time so we recorded that in January, is that right?
December.
In December. And I actually don't know.
Hang on.
Are you looking it up in the background?
I'll see if I can find it. Oh, yeah, here we go. 7.1%. Okay, so inflation
7.1%.
a year ago. So let me just find my spot in the document again. So inflation in the US was 7.1% a year ago. I said that inflation would be lower, but not yet in the target range. So not between 2 and 3%. And my guess specifically was that it would be 5.7%. You also agreed that it would be lower. You thought it would be a little bit lower. You said it would be 4%. In actuality, inflation in the US right now is 3.1%. So we both went over the top. We didn't expect it to come down as far, but you were pretty close.
We did. I'll take the point.
Yep, you were.
I was close.
You were pretty close. Yep, you definitely get the point for that one.
All right.
So yeah, isn't that crazy? So yeah, inflation 7% last year, now 3%. Just sitting just outside of the healthy range.
How quickly things change, hey?
Yeah. It was crazy. Yeah.
Well, it's pretty wild. Well, we went from, what was inflation like? 1.5%, 2%?
Yeah.
Up to 9%?
Yep.
And now back to 3-ish. So, and that was all in the space of just a few short years.
Yeah. Yeah.
So,
yeah, from like
crazy.
2021 to now to 2023.
Now.
It's been a roller coaster of price changes for sure.
It really has been. Yeah.
Yeah.
But hopefully, fingers crossed, we don't get the same pattern as the 1970s.
No.
And
hopefully one cycle's enough.
One cycle and we're good.
Yeah.
We can just keep it down now.
Yeah.
Hopefully we learn from the past.
Yeah, hopefully. All right. On that note, the federal funds rate. So what's the interest rate set by the central bank in the US going to be? It was 4 to 4.25% at the time. You said that it would be 6%. I said it would be 6.75%. Yeah, actually, it is in the range of 5 to 5.25%. So we both went over the top.
Yeah. Which makes sense because we both thought that inflation was going to be higher than what it actually is.
Yeah, exactly right. And we were so wrong on the rate hikes in the previous year's predictions. We thought there would be like 3 rate hikes and there ended up being like 12 or something like that, remember? Like we were completely wrong. So I think we wanted to make up for that by not predicting again that there would be 3 rate hikes, which I don't know exactly how many well, I guess there were like half rate hikes because there were 25 basis points instead of the 50s and 75s that we were getting in 2022. But there wasn't much of a move, a 1% increase in rates throughout the year. So that's pretty small. All right. So
I'm pulling away again, Hamish. Am I still giving myself points for being a little bit closer than you?
Yep.
Yeah.
What's the score?
7.5 to 3.5.
Okay. All right. Interesting.
Can you mount any sort of comeback?
I don't think so.
We shall see.
I don't think so. Maybe. All right. So let's come back to Australia. Australian inflation. At the time, it was 7.3%. I said it would come down to 4.2%. I said that basically I thought rate hikes would be more effective here than in the US because of our variable home loans, that they would push more of a pressure on the cost of living for people here in Australia. You said 4.8%. Actually, inflation was 5.4. Is 5.4%. So it's still significantly worse than the US, which is very interesting. And yes, you get another point. Yeah, I can see you smiling over there.
Thank you, Hayden. You see this? I say highlighting, but
another
I've
point
just
for me.
won another point. No, I'll just bag that one.
Yep.
Yeah, very good.
Yep.
Then what about the cash rate? Cash rate was at 3.1%.
Yep.
How did it look?
Yeah. So
how do we fare?
This one's really interesting. We were both really, really close. So the actual figure.
Oh, really?
The actual figure for the cash rate today is 4.35%. I guessed 4.25%. You guessed 4.5%.
Oh,
so
Hamish, the comeback begins here.
I won that by, what is it, 0.05, 0.025 or something like that. It's very close, but I am slightly closer there. So
8.5 to 4.5.
But we were pretty bang on with that one. We basically created the range around what the actual cash rate was. So
well, together we would do great things, Hamish.
Yeah. Oh, that's the problem. We've just got to combine the predictions.
No. We'd be twice as wrong on half of them.
Combine our Bitcoin, we double it. All right.
Yeah, no.
So that's all so we've done stock market, we've done economic. Now we've got a bunch of other things like political, war, and a bunch of things. So Russia-Ukraine war, would it still be ongoing? We both said, hopefully not, but unfortunately, we both said that it would be, and of course it was. Any other major...
Unfortunately, we both get a point for that. Unfortunately, the score is now 9.5 to 5.5.
Okay, I don't think I can catch up. I don't think I could get there. maybe.
All right, what was next?
Any other major wars in 2023? We both said yes.
Gosh, we were pessimistic.
Yeah, we were.
Will there be another war? Yeah, definitely.
Yeah. It's going to get
the world's
worse.
going to fall apart.
Yeah, pretty much. We were kind of indicating that we were probably talking about potentially China invading Taiwan. we, of course, didn't at all mention the actual war which broke out, which was between Israel and Palestine. So we were right, but not. Well, yeah. I mean, we answered the question. The question was, will there be any other major wars in 2023? And the answer to that is a resounding yes. So we both get a.
All right.
Again, unfortunately, we're getting. That's not really something you want to get a point for.
Unfortunately, we are crushing it right now.
Will there be a nuclear blast in 2024? We were right. Give me a point. Give me a point for that.
Yeah, give me a point. 100,000 people dead. Give me a point.
Yeah, we're in we're wearing gas masks. We're underground. We're like underground.
Parts per million of carbon dioxide in the atmosphere. Yeah, you nailed that. 2 points.
We're both in hazmat suits. Crying. Give me 2 points for that.
Oh gosh, oh, such grim humor, but
boy.
I love it sometimes. You do make me laugh, Hamish. You do make me laugh.
You too. All right, let's get into like the final couple of predictions here. Will Trump tweet in 2023? So of course he wasn't on Twitter. He has his own Truth Social platform, so he hadn't been on Twitter. I said no. You said yes. You said that it was too close to the election and that he would have to kind of get access to the biggest platform. And he actually hasn't tweeted yet.
He hasn't.
No. And the election is, they're in the primaries for the They're in the Republican primaries already. So, like the election campaign is well underway and he has decided not to join back on Twitter. And maybe he will once it gets to the national part of the election later in the year next year. I think it's like November or something like that. But yeah, so far, no. So, yep. Point for me.
Yeah. Oh, I could have sworn that he would have tweeted at some point during this year. So,
I just checked.
That's probably one.
I just checked his Twitter and there wasn't any tweets that aren't deleted. So I don't think he tweeted.
He hasn't.
I feel like that would have been like a big
tweeted.
Story if I feel like I would have remembered that, but
yeah. No, I don't think he has. That's probably one that I would have been more confident on because I think it just makes so much sense strategically for what he's trying to do.
Yeah.
But, yeah, there you go.
Yeah.
Truth Social. Let's go.
Woohoo. All right. SBF, will he go to jail in 2023 was the question. Of course, he was already arrested for actually, no, I don't think was he even arrested in 2022? I'm not into, he probably,
I don't know.
He probably wasn't
Can't
even
remember.
arrested, I don't think. So I said, so the question was, would he actually go to jail in 2023? And I said, no. Right. I said, I don't think the trial would even begin, let alone sentencing, which of course would have to happen before he went to jail.
Right.
Which of course the trial did happen. We don't have the sentencing, but we know he's going to jail. So I guess it depends on the semantics of the question.
Ooh. I say we just both give ourselves. We both said no, he won't.
Yeah. Technically,
so
we're right.
I think half point.
Technically,
but he
we're
is
right.
going to jail.
Yeah.
Maybe full point?
I mean, the way the question was phrased was, will he go to jail in 2023? And he's not in jail.
He's not in jail. All right, full point. So, full point for both of us.
I think that's a full point, yeah.
All right. I can't argue with a full point.
But,
oops.
Yeah.
There we go. So the score
I don't think we were arguing that he wouldn't go to jail. Like, we both said no, but we would have said yes to he will go to jail for what? I think we would have both said that.
Oh, yeah.
Although it was still very early
just
days.
A matter of time, but he'll be able to push it and push it and push it and push it.
Yeah. Especially because the Elizabeth Holmes, Theranos collapsed in 2015. And then she was only tried, last year. Or was it even this start of this year? So it took many years for that to play out. So that was
years blend into one.
Yeah.
All right.
All right.
Well, the score is 11.5 to 8.5. So
okay. All right.
I think technically, how many things have we got?
Well,
three left. So I think technically we can. We can. No, we can't. Yeah, we can declare me the winner.
Yeah. And the next three are all just. They're not real. They're not real predictions anyway. We had, will we meet Buffett in Omaha? And we both said, hopefully. Then we said, will we have an interview with Monish Pabrai in 2023? And we both said, hopefully. And then it was, will we get Phil Town on the podcast? And we both said, hopefully. So that's
none of those.
That's
happened.
A resounding no across the board.
I reached out to Monish again. The the other week,
Oh, yeah.
and he declined.
Ah,
I just don't quite know I just don't know. Know.
Here's what it is.
Yeah,
Maybe,
it is
maybe
what it is at this
2024.
point. Maybe, hopefully.
Hopefully. So that's it. So what
well,
was the
there
final?
we go. So
Yeah, give us
the final score, because we got no, and no, so we got no points there. The final score was actually a lot closer than what you were thinking at the start.
Yeah.
You got 8.5 points, and I got 11.5 points.
Yeah, that's not as bad as I thought. Looking at the first few predictions, I could just see how far off I was on some of my stock market predictions. But yeah, very interesting. There we go. I think you've won every year. I don't think there's been a single year where I've won.
Really?
Yeah, I don't think so. Yeah, I'm not very good at doing these annual predictions.
Fair enough. It takes a lot of hard work.
It takes a big brain.
A big brain, and I would just like to say, if you want to learn to be like me, New Money Education, there's a link down in the
You too can
join my
predict Bitcoin.
5-step investing mastery program, and you can make predictions like me.
Yeah.
Like that Nvidia was going to be the worst performing stock in the S&P 500. Oh gosh,
yeah,
that is so funny.
I think that's my favorite one. That and our Bitcoin ones being just so wrong. But that's my favorite that you said that, because I completely forgot that you said that Nvidia would be the worst. That's just so good. That's great.
That's so classic. Oh well, shows us that maybe we shouldn't make economic predictions, Hamish.
No.
There we go.
I don't think so. Yeah.
All right. Well, are you organising my trophy?
Yeah. We'll get what would the what would it be? Just it needs to be like a trophy of something,
It's just something memey.
Yeah.
It needs to be a big meme.
Yeah.
I don't know.
We'll think of something like a bust of Jim Cramer or something. Like the oracle of the stock market. Yeah.
You got it right. Well done.
Yeah.
It's funny. All right, hey, should we talk about some actual news this week?
Yes. Yeah. What's going on in the world?
So let's start with the Federal Reserve. So the Federal Reserve has made their call about interest rates. It says here the Federal Reserve on Wednesday held its key interest rate steady for the third straight time and set the table for multiple cuts to come in 2024 and beyond.
Wow.
It'll be interesting to see if that eventuates, but this is what it says. With the inflation rate easing and the economy holding in, policymakers on the Federal Open Market Committee voted unanimously to keep the benchmark overnight borrowing rate in a targeted range between 5.25% and 5.5%. Along with the decision to stay on hold, committee members penciled in at least 3 rate cuts in 2024, assuming quarter percentage point increments. That's less than the market pricing of 4 rate cuts, but more aggressive than what officials had previously indicated. Markets had widely anticipated the decision to stay put, which could end a cycle that has seen 11 hikes, pushing the Fed funds rate to its highest level in more than 22 years. There was uncertainty, though, about how ambitious the FOMC might be regarding policy easing. Following the release of the decision, the Dow Jones Industrial Average jumped more than 400 points, surpassing 37,000 for the first time, which is interesting because didn't that article, Hamish, didn't it just say that they penciled in 3 rate cuts? That's less than the market pricing of 4.
Yep.
And then the DJI jumps 400 points.
Yeah, completely rational. Yeah, it didn't help with the predictions as well. I think the S&P was up like 1.5%, like a good amount today. So yeah. I should have written down all the percentages yesterday.
So essentially, wait, let me wrap my head around this. They're saying the Fed is now saying they're going to cut rates less than what we thought.
Yeah.
Stock market up.
Yeah. But more than they previously said.
I don't know.
It's
maybe.
ridiculous. Yeah, it is insane.
But this is where I guess this is where it gets a bit confusing. The committee's dot plot of individual members' expectations indicates another 4 cuts in 2025. So that doesn't change. So I'm not quite sure what's going on here. Or a full percentage point. 3 more reductions in 2026 would take the Fed funds rate down to between 2 and 2.25%. Oh, that's interesting. Close to the long run outlook. Though there was considerable dispersion in estimates for the final 2 years. Well, of course, it's because nobody knows what is going to happen.
Yeah,
like
they can't predict next month.
Yeah, they can't. They don't even know what's happening right now. How can they predict what's happening in 2026? Anyway. Markets, though, followed up the meeting and Chair Jerome Powell's press conference by pricing in an even more aggressive rate cut path, anticipating 1.5 percentage points in reductions next year, double the FOMC's indicator pace. So make of that what you will. Along with the interest rate hikes, of course, we know the Fed has been allowing up to $95 billion a month in proceeds from maturing bonds to roll off its balance sheet. That process has continued, and there has been no indication the Fed is willing to curtail that portion of policy tightening.
There you go. Yeah, and I think
so. That's that's basically instead of when the bonds mature, when the bonds come due, and the government pays the Federal Reserve, instead of the Federal Reserve then taking that money and then just buying more bonds with it, buying more government bonds, they just decide to. They don't do that. They just delete the money.
Yeah. All I was going to say is the market has been absolutely tearing in the last 4 to 6 months. And a lot of that I'm sure is on the back of this idea that there's going to be deep rate cuts next year. So whether or not that comes true will have a massive impact on I think, or at least some impact on where the stock market will be next year. Which ultimately doesn't matter in the long run, but that's rate hikes and inflation are still the two most the things pushing the market around, it seems like at the moment. Long run, who cares? But at least if you're interested in or you find it interesting to see what's happening with the market, then it seems like whatever happens with those unknown factors is going to continue to be a big driver or holding back the market.
Yep, indeed, you are correct, Hamish. I don't think I've got anything more to talk about with that. So should we move on to the next story?
Yep.
Keep it rolling. We've got about 15 minutes to go. So let's talk. Would you like to talk about this climate summit?
Yep.
That's been making very big news headlines.
Yeah.
So the headline here, COP28 Climate Summit ends with deal to transition away from fossil fuels. So government ministers representing nearly 200 countries on Wednesday agreed to a deal that calls for a transition away from fossil fuels after a previous proposal was met with heated and widespread backlash. Quote, with an unprecedented reference to transitioning away from fossil fuels, the UAE consensus is delivering a paradigm shift that has the potential to redefine our economies, the summit's UAE presidency said on social media. Dubai, United Arab Emirates, has been hosting the conference for the past 2 weeks. Against the backdrop of controversy, geopolitical conflicts, and increasing extreme weather events. Quote, we delivered world first after world first, the UAE summit presidency said in a further social media update. A global goal to triple renewables and double energy efficiency. Declarations on agriculture, food and health. More oil and gas companies stepping up for the first time on methane and emissions. And we have language on fossil fuels in our final agreement. And I think this is kind of up until the very closure of this summit, people weren't really happy because they were doing the classic political mumbo jumbo of, we're going to commit, but they weren't really committing to anything.
Right.
And it seems as though just overnight, actually, that's been updated.
Yeah, okay. I don't know anything really about any of this stuff. I'm completely in the dark. I find it interesting, but so what's the nature of how does this work? What's the nature of this deal? Is it
I think it's
like
kind
a
of
pledge or what's the
it's kind of like Paris Agreement. It's just kind of countries coming together and trying to agree on what they're going to do in terms of climate change and global warming. Okay. And the goals are never going to be this country needs to pump this amount of money into this amount of solar projects by this date. It's never going to be like that. It's still very
More
wishy-washy politics.
Yeah. Okay.
More general stuff. But I mean, if it's a step in the right direction, then I'll still take it because it's better than them doing nothing.
Yeah.
So it says here, an updated proposal published by the UAE earlier Wednesday, which was then agreed on after all-night discussions, called for, quote, transitioning away from fossil fuels in energy systems in a just, orderly, and equitable manner, accelerating action in this critical decade so as to achieve net zero by 2050 in keeping with the science. So, like, that's the kind of high-level
Yeah. Okay.
like stuff that they're agreeing to.
By 2150. No. Like,
yeah, by 21.
By the year 25,000.
Yeah.
Yeah.
The draft deal also urged for accelerating efforts towards the phase down of unabated coal power and for tripling renewable energy capacity globally and doubling the global average annual rate of energy efficiency improvements by 2030. Critically, the proposal did not mandate an absolute phase-out of hydrocarbons. A phase-out commitment would likely have required a shift away from fossil fuels until their use is eliminated,
right,
while a phase-down agreement would have indicated a reduction in their use, but not an absolute end. So it sounds like that's what they've done. They've done a phase-down as opposed to a phase-out.
Right.
And, of course, the climate activists are not happy, but...
Yeah.
That's just what they're agreeing to.
Right.
Many believe the COP28 summit could only be considered a success if it resulted in a deal to phase out all fossil fuels. Yeah. The Wednesday announcement comes after the previous draft text published in the final throes of the talks triggered widespread criticism for failing to include language on ending the use of fossil fuels as negotiations laid bare deep divisions among policymakers over the future of hydrocarbons. So yeah, there you go.
I guess, like, I would imagine there's like a lot of industries that would require fossil fuels, even in like a world where we have all these other energy sources, renewable energy sources.
Yeah.
Like, there's a lot of things that just are probably going to need fossil fuels.
Yeah.
Like, I at least that's my very limited, like, 1 IQ understanding of this. So,
I think Elon Musk is like, regardless of what you think on him, is an interesting character, is an interesting person to listen to in this realm.
Okay.
And he pretty much says, look, the bare bones science of it is we have to eventually we have to get rid of all hydrocarbons because there's a limited supply of hydrocarbons, obviously. Like, just don't even think about what we're doing to the climate. Yeah. We have to move away from hydrocarbons because we don't have an infinite supply, so we will run out. But then beyond that, he also, like, he doesn't hate the oil companies. He's like, well, obviously, you know, they were built at a time where oil is, you know, it's very necessary, and we built an economy around oil. You know, he gets asked, oh, if you could just switch off all oil production, all oil usage tomorrow, would you do it? And he says, of course not.
Yeah.
He says, no way, because the world would just be in utter chaos.
Yeah.
So it's very much like, I understand. I'm like a tree hugger. I love that stuff. Like, I'm big, you know, let's fix climate change, but I'm not, I don't go about it saying like, oh, we need to unplug. We need to, you know, stop the oil right now. Like, we do need to transition. So as long as there's being big steps taken in that direction, like, of course, a lot of industries, I mean, even transport, we're going to, like, airplanes are going to run on jet fuel for the concept of an electric jet is still a long way off.
Yeah.
So there's going to be industries that just run on hydrocarbons, and that's just that. But overall, I think we just keep making that effort to get closer and closer to net zero.
Improve the technology, which the human race has been pretty good at doing for a very, very long time. So.
I mean, what happened? There was a global pandemic, and we put a lot of money and resources into developing a vaccine. And, you know, regardless on your stance on vaccines or whatever, it's a pretty amazing feat of science that got done. Yeah. Like, we did develop a vaccine for the coronavirus in like a year.
Yeah.
Maybe even less than a year.
Yeah.
Phenomenal.
Crazy.
Phenomenal.
Yeah.
Yeah. So yeah, I think that these big, you know, hoo-has, these COP summits and all that sort of jazz, you know, you can take it how you want. You can say, oh, they need to tighten up their goals and commit to more. But at the end of the day, we just
Yeah.
need to keep transitioning.
Yep.
Keep moving.
Keep
the right
moving
direction.
forward.
Yep. All right, let's talk about something else, Hamish. SpaceX valuation. You want to hear about it?
I do. What happened?
One of the most valuable private companies in the world is SpaceX. So the company is discussing an agreement, right, with investors to sell stock from insiders in a purchase offer at $97 a share, according to a person familiar with the discussions. The offer does not include raising new capital, as the purchase offer represents a secondary sale of existing shares and is expected to close in January.
Right.
SpaceX typically performs these secondary rounds about twice a year to give employees and other company shareholders a chance to sell stock. The latest valuation represents a 20% increase from SpaceX's previous high of $150 billion, which the company hit through a July secondary sale at $81 per share. So this means that the valuation of Elon Musk's SpaceX has hit $180 billion.
That's crazy. If you'd asked me to guess, I would have been so far off. We could have added that to my terrible predictions this episode. I don't know.
What would you have said?
I probably would have said like 50 billion just out of just throwing it out because I have no idea. I did not realize. I didn't realize they were that big. That's crazy.
Yeah, I don't really know how the valuation how this stuff works.
Yeah, I guess it's like an internally decided valuation to some respect.
Yeah. I actually don't know how this I would need to do a lot of research to figure this out because obviously in the realm we just don't look into the realm of private stock transactions and that kind of thing because we can't access them. We're not a part of that.
Yeah.
I wonder how that valuation gets drawn up.
Yeah.
And who ticks it off. And I mean, clearly, if the investors buy the shares at that valuation, then they're happy. They're happy to do it. But I don't really know how it works.
Yeah. Well, I mean, that's the thing. Like private, you only see the valuation of a private business when they sell stock. So that can be very infrequent and you can see big swings. We saw lots of tech companies have massive valuations in 2021 and then, 90% drop when they tried to raise funds the next time or when they went public in 2022 or 2023. So, you have to take private valuations with a handful of salt.
It's interesting because they're not raising new capital, so it's not like they're coming out and offering a whole boatload of new shares and being like, "Hey, we're selling another 5% of the company," or something like that.
Yeah. Just giving insiders an exit, a chance to exit.
So I don't know. Maybe if
awards,
maybe if anyone knows how this system works of coming up with private valuations to do this sort of stuff, please let us know.
A very well-paid investment banker.
Yeah, pretty much. What else have I got to say about SpaceX? The article notes, it has a near monopoly on the US satellite launch market due to its workhorse Falcon rockets and the struggles of rivals to field operational rockets to compete. SpaceX's Starlink satellite internet business is seen as the key economic driver for the company, with more than 5,000 satellites launched to date and a service boasting upward of 2 million subscribers. I actually know a fair few people just here around Canberra that have Starlink.
Really?
Everybody, literally everybody says it's amazing.
Really? That's crazy.
Yeah, literally everybody I talk to that's had Starlink.
So is this in their house or is this like in remote areas or like what's...
Yeah, generally it's like people living out on like farms or, in small, but I could just get it if I wanted to and stick the dish on I'd have to stick it on my balcony because I'm in an apartment complex. But
or hold it out on the balcony. Yeah.
But even, people, you ever heard of the YouTube channel Sailing the Vagabond?
No.
They just have like a sailing ship and they've got Starlink. They just stick it on the boat and they've got high-speed internet when they're out at sea.
Wow.
Kind of thing.
There you go.
So, it's just a dish. You just got to get the dish, got power, stick it there, and Bob's your uncle.
Wow. There you go. Interesting.
Yeah, nice. It's a really, really good product. I think we're going to be hearing a lot more about it in the next few years. What else? They say its monstrous Starship vehicle continues to advance in test flights, representing an attempt to create the next generation reusable rocket for unprecedented scale and power. Yep. The company is one of the most valuable private companies in the world, classifying it as a centacorn or a hectacorn.
Okay.
A $1 billion valuation unicorn 100 times over. So there you go.
Okay.
That's add that to the vocabulary, Hamish.
Yeah. That's
A
hilarious.
hectacorn.
A hectacorn.
Describe SpaceX in one word.
They should just
Hectacorn.
They shouldn't have done that. They should have gone with like different mythical like creatures. Like you have the unicorn is like 1 billion, and then you have like the yeti is like the 10 billion. Or, like
Bigfoot,
like the leprechaun, and like you've got like you just have a bunch of like mythical creatures, like the mythical valuations that all these companies have. But anyway.
Yeah. Oh, we actually just hit Centaur status.
Yeah.
Don't know if you saw that in the news.
Yeah.
Okay, cool. We just got Zeus status. Anyway.
Oh boy.
What else is this? SpaceX latest valuation ranks the company above the market value of any top US defense contractors, including Boeing at 150 billion, Lockheed Martin at 112 billion. How do you say that? Northrop Grumman? 73 billion. Yeah.
Interesting.
Yeah, anyway. There you go. SpaceX.
There you go. Woohoo.
Apparently valuable.
Yep. Apparently valuable. Are they going to go public or no? I thought there was like
I don't
some.
think they can.
Oh.
Oh, well, I think the rocket side of the business, there's some like political, I don't know, military thing that stops them. I'm not exactly sure. I could be wrong there.
Okay.
And that's why they were saying that they might try and spin out Starlink as a separate entity, and then Starlink goes public. So if you can still capture the economic benefit of Starlink.
Yeah.
Although, or maybe it was literally just the fact that Elon always wants controlling, the full control of the Starship platform. I don't know.
Yeah. Okay. Interesting.
But I remember there is when it gets into rocketry, I know that there's much more. There's heavier scrutiny and laws. Like for example, Elon got scrutinized on stage one time, saying, "Hey, Elon, why do you only hire people from the United States?
Oh yeah, I saw that.
We have great technicians from or great engineers from other countries. Why do you?" And he said that. He said, "Look, sorry, we work on rockets. Rockets are considered advanced weapons technology, and therefore we're only allowed to hire people in the United States."
Yeah.
So there might be some weird rules around that. I'm not sure.
Yeah. Can't just make a rocket in your backyard, I guess.
Yeah. So yeah, there you go. All right, Hamish, shall we do? That's pretty much all I got for news. Very boring story about OpenAI. So I'm not even going to bother. Shall we do a couple of Q&A questions?
Yes.
I've been talking for a while. Why don't I ask you this one?
Ask me this one.
I'll ask, hi guys, love your content. Where do you get your general financial news from? I find a lot of it sensationalist. Don't say Seeking Alpha.
Well, actually,
Okay.
if you want to get a 7-day free trial, no, I won't say that. No, you're absolutely right. I think, unfortunately, a lot of news now just is sensationalist, just because of, probably in part because of the internet. Like, it's so competitive for covering news stories that you just end up getting these like, they're just pushing the boundaries on clickbaity headlines just to get you into their site so that they can run ads. YouTube suffers from the same thing as well. So that's unfortunately kind of the nature that the internet I think brings to the media industry. But in terms of what I use the Wall Street Journal a fair bit. Oh, and the other thing I'll just say on that is on sensationalism is you've just got to have a strong filter for it.
Yeah.
Because all these sites that I'm going to list, they have really good news coverage and analysis of certain topics, but they also have a lot of sensationalist garbage that you just have to kind of mentally filter out. So it's hard to avoid. But the Wall Street Journal, The Age in Australia is pretty solid. CNBC, of course, notorious for having an enormous amount of garbage on there, but they have some good analysis that and they also kind of keep you up to date with everything that's happening. If you like, they pretty much cover every little thing, and that's good and bad, right? But at least if you want to know every little thing that's going on in the world, generally CNBC has it. And the Daily Upside is like a really curated media kind of outlet. So if you want way less sensationalism, then the Daily Upside has you covered, but they won't have kind of every piece of news that's going on right now in finance or economics.
Yeah, cool. I tend to agree. Most of the stuff that I read is just from CNBC. But yeah, you just have to once you've trained yourself to have a good filter and cross-check data, all that sort of stuff, then you're pretty good. You can really read from anywhere as long as you come at it from a neutral kind of perspective. So yeah, you're right. With CNBC, you get a flood of everything, including fund managers' opinions and analysts' opinions and this and that. If you just read the news to actually get an informed opinion of what happened or what is happening, as opposed to what people think about what is happening, then that's fine. Yeah. Cool. All right. Well, that's pretty much it. That's what we've got for today, everybody. Hope you enjoyed this episode. What are we doing next week? Are we going to be back next week? We're going to have a week or two off, I think, at some point, but we need to figure out exactly what's happening. We probably should have planned this. Planned what we're doing.
I think we're doing an episode next week. I think.
Okay. Yeah.
Maybe. Yeah.
No, we'll do one because we've got to do our 2024 predictions at some point.
Ooh,
or do we do that first week of January?
Last year we did it in the first episode of the year, so I guess we'll see. Either way, yeah.
All right, we'll do that. Yeah. But we'll see. I don't like leaving it. We may or may not see you next week. No, we'll do an episode next week. Yeah. I'll be in Perth, so I'll just be on my laptop, but we can still make it happen. Yeah. We'll do an episode next week.
Yeah. Sounds good.
Yeah. Easy. All right, cool. glad we figured that out live on air. All right, thanks everyone for listening, for watching. As always, send over any Q&A questions, any topics you want us to discuss. Just leave a comment on the latest episode of the podcast on YouTube or in the Spotify question box. But apart from that, guys, hope you guys are winding down for the rest of the year. Hope work's almost finishing up, getting ready for the holidays. Enjoy whatever you're doing. We'll see you next week, so we'll talk to you more then. But yeah. All right. Adios. We'll see you next week.
See you guys.